those final weeks of the year when every financial article is screaming, do this before December 31st. But here's what they're not telling you: the psychology behind why we make certain money moves at the year end. And more importantly, how to make sure those moves align with your actual goals, not just what everyone else says you should do. Especially you business owners, you're the most vulnerable to making some poor decisions over the next couple weeks. So listen all the way to the end to get to know the traps and how to avoid them.
In a world where chaos seems to reign supreme, where uncertainty lurks around every corner, and financial markets are now more unpredictable than ever, there's one place you can turn to find clarity and control. Welcome to the Wealth Wisdom Financial Podcast.
Hey, I'm Brandon.
And I'm Amanda.
Join us as we dive deep in the world of personal and business finance
to assist you in navigating through the chaos and building the financial future you deserve.
We believe when conventional financial thinking doesn't get you where you want to go,
you need wealth wisdom.
So if you're ready to take control of your financial destiny,
tune in to the Wealth Wisdom Financial Podcast.
Because in a chaotic world, your money shouldn't be.
Subscribe now and never miss an episode.
So if you're listening to this, chances are you're feeling that familiar year-end pressure. Maybe you're wondering if you should be making last-minute tax moves, maxing out retirement accounts, giving to charity, doing backdoor Roths before the year closes. Maybe you're reviewing your profit margins, wondering about Section 179 deductions, or trying to decide if you should invest in that new equipment or buy that new vehicle before December 31st. Today, we're going to explore not just what to do, but why we do it and how to make sure your year-end money moves serve your long-term financial well-being. Let's be honest, between holiday parties, client gifts, and that endless supply of office treats, your gut instinct might be a little sugar-coated right now. I'm serious. Did you know that your digestive system has its own neural network? Scientists call it the second brain, with over 100 million neurons in your gut, which explains why so many business owners feel like their decisions are gut instinct. But here's the thing: between the holiday cookies in the break room and the endless cups of eggnog, or, all those fun things we like to eat around this time of year, candy canes and cookies galore, our trusty second brain might be running a little bit slower than usual. So don't worry though, today we're going to engage both brains to make better year-end money moves. Because psychology isn't just about what's going on in your head, it's about your body as well. So there are prominently 3 psychological triggers that drive this year-end money decision extravaganza, and understanding them can help us make better choices, both personally and in our businesses. So we're going to go through these big 3. The first one is the December deadline effect. We tend to overvalue arbitrary deadlines, like December 31st. It's actually a clever trick if you want to use it in the positive. Keep delaying something, give yourself a deadline, and that you'll experience this deadline effect. It creates this kind of artificial pressure that can lead to rushed decisions, however, right? You give yourself that deadline. If you don't do anything up until the day before that deadline, you're going to rush to make the decision right away. Now, there are some real deadlines, like for tax deductions, but many are self-imposed. Let's talk about how to distinguish real deadlines from artificial pressure, because this time of year, everything can feel urgent. First, there are genuine December 31st deadlines, tax deductions, most retirement contributions, equipment purchases you want to write off this year. For us business owners, that Section 179 expensing really is a use it or lose it situation. Same goes for maxing out most of your tax advantage retirement accounts, or doing Roth conversions, or making those charitable deductions that you want to deduct this year, right? I get so many emails from charities on December 31st that I need to give by midnight for it to count. But then there's what I like to call manufactured urgency. You know what I mean, especially if you're in sales. Those end of year special pricing emails from vendors, that pressure to close out strong, even when your business naturally just cycles differently. The rush to spend your whole budget so you don't lose it next year. We've all been in those kind of artificial manufactured urgency kind of situations. So here's a quick way to sort real from artificial deadlines. 3 questions. Will this opportunity truly disappear on January 1st? If it's a tax advantage, maybe, probably, yes, right? If it's a vendor's special offer, probably not. Second question, what's the cost of waiting? Sometimes waiting means losing a tax deduction, sure. Other times waiting gives you clarity and better cash flow. Actually, and if I believe that my future is better than my past and I'm actually going to make more money next year, would that tax deduction be better next year or this year? What's the cost of waiting or advantage of waiting? And then third question, am I making this decision from a place of strategy or scarcity? Year-end equipment purchases are great if they fit into your business plan. But if you're buying just to save on taxes, you might be letting the tax tail wag the business dog. We don't want that, right? So is this strategy or is this out of scarcity? Remember, every dollar you spend to quote unquote save on taxes still means spending money you might need for other things. That new piece of equipment might save you 30% on your tax bill, but you're still spending 70% of your real money. Make sure that fits with your actual business strategy, not just your tax strategy. Okay, so there's the first one. We have to go against this deadline effect and this December deadline effect. The second one is the clean slate syndrome. Try to say that 10 times fast. The clean slate syndrome. Our brains desire fresh starts and clean breaks, right? This is more about January 1st than December 31st. But why does January 1st seem like this powerful reset button, especially for entrepreneurs and business owners? There's actually fascinating psychology behind this. You know that feeling when you start a fresh notebook? I'm a paper nerd. I love I got a new journal. I've actually have a new planner. It's like December and I haven't started writing in it yet because I'm looking forward to that crisp blank pages or, pre-filled kind of pages with outlines that I can start to fill in and everything seems possible at this moment. January 1st is just like that, but for your whole business, not just your nerdy planner awesomeness, which if you want to know what mine is, reach out to me. But our brains are wired to love these temporal landmarks, moments that feel like naturally new beginnings. And society has made January 1st the mother of all fresh starts for us. But here's the really interesting thing. This fresh start effect isn't just a feeling. Research shows that we're actually more likely to take action toward our goals after these kind of temporal landmarks. That's why gym memberships go up in January and why so many business owners choose January 1st to launch new initiatives or change their pricing. The problem is we often put too much pressure on this arbitrary date. We tell ourselves everything will be different when the calendar turns. But just because the clock, counted down to midnight and then turned to the new year, doesn't mean anything's going to change. And yet we create these massive business plans that would challenge a Fortune 500 company, let alone our growing businesses. I've done that, right? Like a lot of us still do that. I still struggle to make sure I don't do that. We basically try to Marie Kondo our entire business in one sweep, right? Like in 1 week leading up to the January 1st or 1 week after January 1st. Instead of falling into this all or nothing thinking, let's talk about how to harness this psychological reset in a healthy way. I've got a few ideas. Maybe you use the fresh start energy of this, new notebook, new page in your life story and a new chapter beginning in your business journey to reflect, plan, but don't expect overnight transformation. So take the good, right, without the pressure and the expectation and trying to do too much. One way you could do that is maybe break some of those 2025 goals into quarterly milestones rather than trying to change everything day one, right? January 1st of the year. Also, make sure you're keeping what's actually working from 2024. You don't need to throw out all your systems just because the calendar changed. And also maybe think of It's actually my favorite. So if you drafted away, come back now. I got you on this one. Think of January 1st as the start of a new chapter, not a whole new book. Like I love, like, I have a planner for each year. I get a whole new planner for each year, but your life is not a planner. You're starting a new chapter, not a whole book. Remember, your business didn't get to where it is overnight, and it won't transform overnight either. The real power of January 1st isn't in the date itself. It is using that natural momentum to set sustainable changes in motion, right? To take those micro adjustments, a Kaizen, the 1%, right? That you've been doing all year long, and give them a boost, get some extra motivation, get some extra excitement around them, and then keep them going throughout the whole new year. So to summarize this one, with the this clean slate syndrome, it's not about new year, new me, right? Exit that out from your vocabulary, but more like new year, new chapter, or new year, new level, whichever one you like, right? Emphasize that you're taking your current story, your current game, and you're continuing on to new and better stages of that story in that game. You don't restart, right? If you're playing a video game, you don't want to go back to the beginning again and restart the whole thing. You just want to go to the next level, right? That's how you and your business evolve. I don't want to start a book either from the beginning. I want to go to the next chapter. That's what we're looking at here. Okay. So we got the December deadline effect and the clean slate syndrome. The third one I'm going to talk about today is the social comparison surge. If you missed the last episode, we talked a little bit about comparisonitis and whatnot. This is a little bit different. It's not just that feeling bad when others succeed. It's about how those feelings drive us to spend money we don't have on things we don't need. No judgment here, but let me explain what I mean. You're scrolling through social media and you see a competitor's elaborate client appreciation gifts, and suddenly your thoughtfully chosen gift cards feel inadequate. Or maybe you notice another business owner's fancy holiday party photos while you're planning a very modest team lunch. Before you know it, you're pricing out catering services that you didn't budget for. This time of year, we see everyone's highlight reel as business success. The new office spaces, the team expansion announcements, the fancy tech upgrades. And something interesting happens. What starts as an inspiration can quickly turn into panic purchasing. You might find yourself thinking, well, if they're investing in new equipment, maybe I should too. Even if that's not the right time for your business to do the same thing as their business, right? Here's where it gets really fascinating and maybe a little bit scary. When we feel behind or inadequate, some of us fall into what's called doom spending. It's like stress eating, but with your credit card. You know that feeling when you think, well, I'm already over budget, might as well go all in. That's doom spending in action. Maybe you upgrade your office furniture because one chair needs replacing, or you buy the premium version of every software subscription because you're feeling like you're falling behind. New tech, new, innovations. Let's drive, right? Like spend. And what really drives this is comparison and stress. They drive doom spending on the personal side too, with, shopping spree for gifts for your family or for yourself, and to make up for those feelings of inadequacy in your business. So instead of getting caught in this spending spiral, try this. Create a December's desire list, right? Where you just write down a piece of paper, open a note on your phone, write down everything you feel pressured to buy or upgrade right now. Then let it sit for at least 72 hours, if not longer. Like, make it a challenge. How long can you let that list sit? You'll be surprised how many things you thought were urgent feel less crucial after a 3-day cooling period, or maybe even a week, if you want to take that challenge. Remember, true business growth isn't about matching someone else's spending. It's about strategic investments in what makes sense for your unique situation and for your unique business. Sometimes the most powerful move is deciding not to spend, even when it feels like everyone else is. Also, there are more healthy ways to manage your stress and build your confidence and, make sure that you're not feeling inadequate, but that you're embracing your true self and putting that out into the world in a very confident way. My favorite is to get moving, like literally exercise, but find your way. And remember, some of the best stress relief and confidence building things don't cost a dime. Got it? Okay. Now, my skeptics that are listening, I love you. I'm a skeptic too. You might be thinking, but there's probably some money making moves that I need to do at year end. And yeah, I'd say absolutely. The key is making intentional decisions rather than reactive ones. Let me tell you a story about Nan, not a real client, more of a composite of various things I've done with a few different clients of ours. Nan used to panic every December, rushing to make tax advantage investments and charitable contributions without a clear strategy. After working together, we created what we call a December decision framework. And here's how it goes. First, we want to do a strategic assessment. We want to review our actual tax situation with a professional, a tax professional, CPA or enrolled agent, long before or at least by November 1st. Now, you're listening to this in December. You might not have done that. If you can get that in, good. But if you can't do that this year, no pressure. Make sure you do it next year. Now, tax professionals are typically really good at coming up with ways that you can save taxes this year. So they might even hand you a list, right? Give you some ideas. And you might think of some more, right? Go back and forth with them. And make sure you know, is this a real deadline, December 31st? What happens if I wait to January 1st? All those kind of things. And make sure you know, okay, what are my true December 31st deadlines? And identify which kind of moves can move to Q1. So now we've got the strategic assessment. We know our tax situation. We know what's a true deadline and what can wait till next year. Then we do an emotional check-in, asking, am I making this decision from a place of pressure or purpose? Considering if this move aligns with my long-term financial strategy. Sure, it might save me taxes now, but am I going to have to end up paying more taxes later because I made this move, right? Does it align? And then evaluate if you're trying to keep up with others or serve your own goals, right? So we did the head thinking with the CPA or an enrolled agent, and then afterward, we did the emotional check-in and long-term financial check-in, which might be a little heady too. And then we move forward with our action plan. Create a calendar of necessary year-end moves, building in buffer time for unexpected opportunities, and including time for reflection and planning. I set aside a whole day in November just to reflect and plan for the next year. It's one of my favorite day of the year. You might not be able to put a whole day together. Try a little bit of time, as much as you can have, maybe a little bit spread out over a little while, but more reflection, more planning, more intentionality. Love that. I want to go back to one thing I kind of went quickly through, which was the buffer time. The fascinating thing I've seen happen too many times is that people have year-end tax moves and then they wait and they try to do it within the last 2 weeks of the year. And especially if they involve moving money from someone who does not want you to move their money from them, that can get really tricky. Especially because, like your business, people want time off around the holidays. And so the place you're trying to move money from or to, they also have employees out and things take longer. And so there's been people that have tried to do things by December 31st that cause themselves a lot of stress to try and, because they waited too long to do it, or they missed the deadline, right? So this podcast is coming out December 18th. Is that right? Yeah, December 18th. Make your deadline tomorrow or the next day. Try to get it done before the last couple weeks of the year, and make sure that you move forward as soon as possible. If you do have some things you want to do, again, not a false urgency. Don't move things forward that aren't actually true. But if you need to have a conversation with your CPA, you need to have a conversation with your long-term financial planner, you need to contact people to move money. That might take some time. The sooner, the better. Okay. As we wrap up today's episode, remember that the best year-end money moves are the ones that align with your personal financial journey. Don't let the December rush push you into decisions that don't serve your long-term goals. You might be feeling like, oh, I wish you would have published this episode months ago. And I feel you. I wish I would have too. But we also have this really cool place where we publish things like this all throughout the year, where we have tax things, right? Anytime you want, all this kind of juiciness. And we help people make intentional money moves 5 days a week, really, rather than reactive ones. So I want to personally invite you to join the Wealth Wisdom financial community. It's exactly all about that, making intentional money moves rather than reactive ones. I know navigating business finances and personal finances, they're complicated, but they don't have to be a solo journey. Inside our community, you'll find entrepreneurs just like you who are committed to making strategic financial decisions, not just December, but all year long. So for just $97 for the entire year, less than your monthly coffee budget, you'll get access to our complete library of money mindset resources, practical how-to guides, and our success dashboard mini course. Plus, you'll join our monthly group coaching sessions where we dive deep into topics just like we covered today. This isn't just another community. It's your strategic, intentional partner for 2025. So head over to wealthwisdomfp.com/community to join us. Let's make 2025 the year you stop reacting to financial pressure and start proactively building the business you envision. The doors are open now. I'd love to see you inside. This community, we've been doing it for a couple of years, and we'd love to see you in there. Again, it's only $97 for the entire year, and we have a 30-day money-back guarantee. So if you get in, you're like, actually, this isn't what I thought it was going to be, we'll give you your money back. Okay, that's it for today. Thanks for joining us. Hit that subscribe button and live long and profit. The topics presented in this podcast are for general information only and not for the purposes of providing legal, accounting, or investment advice. On such matters, please consult a professional who knows your specific situation.